Okay, so now we've looked at the accounting equation. We've gone through and recorded several transactions, transaction A through H here. And so now we can look at creating a set of financial statements. So financial statements are the reports that people use to make business decisions. An example of reports, so they use more than just one, but they're the main goal of the accounting system. I'd say the biggest goal for sure, to get a good, correct, timely set of financial statements into the hands of management so they can make decisions about it. So there are four financial statements. We're really mostly going to focus on three for now. We got a whole chapter on the statement of cash flows that we'll kind of talk about later. So I'm going to focus on these first three. The first one is the income statement. The income statement is kind of exactly what it sounds like. It is how much money the company made, how much income they had. So effectively only two things. The income statement only has two types of accounts on it, generally speaking, and that is revenues and expenses. So if you look up here in our columns, basically the income statement is going to contain all of these. Okay. The other thing about the income statement is for a period of time. It needs to be stated how long it is for, because that matters. Okay, so some companies might be brand new, it might be their first year, and it's kind of easy to know probably how long it's for. But you think about some companies that are 50 or 100 years old, you don't want an income statement that shows all of the income for the entire time frame that's been opened or that it's been around. So instead, it will say something like for the month ended, or for the year ended, for the quarter ended, whatever it is. It'll give the period of time, and I'll tell you when it ends. But the income statement must be for a given period of time, and all that's going to be on it is revenues and expenses. And effectively, it's a pretty simple statement. It's going to start with all of our revenues. If we just have one, that's fine. That's going to be revenue minus expenses equals net income. And that's really all there is to the income statement. Next one is a statement of retained earnings. The statement of retained earnings is a summary of the changes in retained earnings that occurred during a specific period of time. So retained earnings has several things that affect it. First thing retained earnings has is we have a beginning balance of retained earnings. Okay, so we have what we started with. You can think of retained earnings kind of like a bank account. Okay, so the beginning balance in the retained earnings or the bank account would have been whatever we ended the prior time frame with, because this one is also for a specific period of time. Then we are going to add any net income. So that's why we actually have to make the income statement first, because we need the net income from the income statement in order to create our statement of retained earnings. This here. We would add our net income, and we would subtract any dividends, because that's money going out of my retained earnings. And that will come down to my ending balance of retained earnings. Okay, so effectively retained earnings, I don't have an account up here, I would have a retained earnings account generally speaking. This is a brand new company, that's why there wasn't one, because we usually use it at the end of the year. So retained earnings really, in this case, in this particular one, is really only going to affect dividends and then the net income that we find from the income statement. I'm only going to have those two in it. The third financial statement is the balance sheet. This one, by the way, is for a period of time too, because there's a beginning balance and an ending balance. It's got to be a period of time. The balance sheet is a summary of, or a list, excuse me, of all the assets, liabilities, and stockholders' equity as of a specific date, and it's usually at the close of the last month. So this one is a specific day. It's a snapshot. It's one point in time, whereas the other two we just talked about it for periods of time. So it's basically, and by the way, it's basically the accounting equation. We have assets, and why it's going to balance, because our assets equal our liabilities plus our stockholders' equity. Now we get that stockholders' equity from the ending stockholders' equity from the statement of retained earnings. Okay, so that's where we get our retained earnings, and we add in the common stock. I'll just briefly mention the statement of cash flows. Statement of cash flows is a retelling of the financial statements in a way that shows what actually happened with cash, because as you can see, there's times when we have earned something or paid for something but haven't paid for it in cash yet. So statement of cash flows is kind of a different statement all on its own to just speak to exactly what the cash uses and sources were. Where did cash come from and where did cash go? effectively is what the statement of cash flow is about. So now we can create the set of financial statements for this company. So for my income statement, and this is a brand new company, my income statement, this is a brand new company, and so the month is ended, so for the month ended November 30th, 2017. And as I said, we start out with our revenues, which in this case is fees earned. And my fees earned was $7,500. And then I'm going to take out all of my expenses, wages expense, which I have twice for some reason. Get rid of this. Wages expense, rent expense. And I'm just hitting equals and clicking on these so I don't have to retype them. Supplies expense, utilities expense, and miscellaneous expense. Equals, I want them to show, they are negative, but I want them to show up positive, so I'm going to put equals negative. I'm going to put these numbers down. Equals negative 800. Equals negative again. Okay. And that is really, and the way the book has it, they put the revenues out here, which is fine. You can do it columnar if you want to. So I have my revenues, I have my expenses, and as I said here, revenues and expenses for a period of time, and the whole thing is just revenue minus expenses. So I'm going to total these expenses. And in Excel, I can just hit equals, and I can just click on what I want to add, hit equals plus, 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 plus. And you can do the sum function if you know how to use that too. But I'm trying to make this as simple as possible. So that's my total expenses. So to find my net income, like I showed up here, I take my revenues minus my expenses. I'm making these pretty simple, and I'm not going to be too terribly particular about what they look like if you make some. But they're things that have to happen, like you have to take your expenses away from your revenues to find which the income is, certain directions things have to go. So statement of retained earnings is next. 38, and then we have, it's again for the month ended because it's for a period of time. Now I need my beginning balance. Well, this company was brand new, so my beginning balance is 0. Just for future reference, if you have a company that is not brand new, the beginning balance would be the ending balance from whatever the prior time frame was. So if this is a month ended November, I would use the ending balance from October as my beginning balance for November. But since this is a brand new company has to start off with 0. So that's why that's 0. It won't always be 0. So pay attention to whether it's a new company or whether it's a company that's already been organized for a while. My beginning balance is 0. And then, as I said up here, I add in my net income, which I just found. Net income. And then I subtract out, as I said up here too, my dividends. Which I'm fine with. You can put as a negative number, you can put as a positive and subtract it. I'll just do it the way the book does it, just to make it clear. To find my change in retained earnings, so again, I mentioned earlier, it's kind of like a bank account. So this was my bank account balance and my equity, really, my retained earnings balance, and at the beginning of the time frame. This is what happened. This is my net income that increased it. If I had a net loss, by the way, it would decrease it. And then my dividends that decrease it. And so then I'm getting a net amount of change. So I'm adding these two together. So now I can find my ending retained earnings balance. You could date these instead rather than beginning and ending. You could say November 1st to November 30th, since this is a month. If it was a year, January 1st, December 31st, however you want to do it. Just that it does matter that you have the dates correct, because that's the only way the reports are informative. And the final one we're going to do in this video is the balance sheet. The balance sheet is quite literally just a list of assets. Okay, so I'm gonna list all my assets out, and then I'm gonna list all my liabilities, and then I'm gonna list my stockholders' equity. So my assets, I've got cash, I've got accounts receivable. Actually, in this case, I don't have this company didn't have any accounts receivable, so land, it's a zero balance, I'm not gonna put it in there. And then supplies. Notice in this one, by the way, let me move this down a little bit. Make this easier. This is the balance sheet. The balance sheet would not be for the month ended, it would just be the date itself because it is a snapshot of a single point in time. So this would just be November 30th, 2017. Not for the month ended, but just a single date. So my assets, and again, I use the ending balances because it's the end of the month. There's my cash balance, there's my land balance, and there's my supplies balance. So now I can total my assets. Total assets is the sum of those. Okay, for $26,450. My liabilities, I have just one, I believe. Yep, accounts payable. It's going to be $400. Scrolling's not wanting to work. 400. Okay, and under stockholders' equity. Now, I have common stock of $25,000. That's part of stockholders' equity. But realize that what I did above here with the net income, if you think about the net income and the income statement, the statement of retained earnings, I summed all these things all together in one, right? I created an income statement. Well, that summed all these and came up to a net amount of an increase in stockholders' equity. Then through the statement of retained earnings, I took these dividends out, which means it netted those out too. So the one single number that I can use that summarizes all of this information all in one place is the ending balance on the statement of retained earnings. So if I just take, since this is a single date, if I just take my, sorry, I've got the wrong place, common stock. Just take my, and I'm going to label it ending balance just for clarity's sake. Technically, this should just be called retained earnings because there can't be a beginning and end because it's only a single date, but I want to make sure you know where I'm getting this from. Technically, it should just say retained earnings. I'm going to take this balance right here, the ending retained earnings balance of $1,050. So now I can total up my liabilities and my stockholders' equity. So I can take this, my liabilities plus this. And if I've done this correctly, which hopefully I have, if I've done this correctly, this balance sheet should balance, which means just like the accounting equation, my assets should equal the total of my liabilities and owners' equity. If you ever get to this point and it doesn't, you got to go back and start looking for where's the problem at, what I do wrong, because something has happened wrong. Because if it's done correctly, it should always balance, and luckily we did do it right. That is the financial statements, and that's the only three that I'm going to cover here. And I think this is going to be this is my last video for chapter 1. So please, shoot me an email if you have any questions. If you want me to do example problems, I can do that too. And that's it. Thank you very much.